Welcome back, ladies and gentlemen, to our series on the top 5 strategies to roll out before the end of the year. Number 4 on our list we're going over today is the retroactive S-selection for your LLC. If you're self-employed and you own and operate your own LLC and you're making some profits, this might be the perfect strategy for you. Probably the highest ROI thing you could do before the end of the year that's still available, but you got to act now. Stay tuned and take a listen to this video because it's going to wow you. Before we get into it, hello, my name is Andrew D'Amico, CPA partner here at Ledgerly, alongside Mike Abrahamian, also a CPA, our other co-founder, where we're constantly talking, hey, how can we save on taxes? How can we build better asset protection and ultimately build a plan for that future generational wealth and ultimately a tax-free retirement? If you like the sound of those three things, please do yourself a favor. Subscribe to this channel, give us a like, share your comments and questions in the comment section below. We'd love to hear from you and work with you in the future. But enough of that discourse. Let's get right into this topic, okay? Most business owners don't know about this or ultimately wait too long to actually implement this strategy. And it kills me when a new client comes to me and says, yeah, I've been operating as a Schedule C business for 10 years, 20 years. Oh, the entire life of my practice. And I know they've been overpaying and that nasty FICA tax, that self-employment tax, because their accountant didn't know, wasn't giving them strategy, never pitched the S-Corp. And it kills me. I can't go back and save them, but I can make sure that you listening here, you get this information and you make sure that doesn't happen to you, because I don't want you overpaying thousands of dollars in taxes to the government every year. I know I don't want to. So here's the deal. Let's go to the whiteboard. I mean, the whole reason we're talking about this is it's a strategy and a way to reduce our self-employment, because we are an entrepreneur. We have our own entity. We're running our own operations. So that's what this video is for, and that's where we see savings. But you need to understand kind of how the tax code works and what this tax is, because getting an S corporation, making an S selection on our LLC does not do anything for our income tax liability, what everybody's familiar with. Oh, what income bracket are you in? You in 10%, 12%? Are you up in the 37% bracket? This has no effect on your income tax. This is solely on self-employment taxes. So we're just a quick case study just so you could see it. Let's take two entities, right? Let's take, hey, you're an LLC, you own and operate a single member LLC. You've been reporting it on your Schedule C, which is on your individual tax return, your Form 1040. That's on the left side. On the right side is an individual who has made an S election. It's a tax election. It's not changing the entity structure. You still have the LLC. It is now just taxed as an S corporation, meaning it gets a separate tax return. What that is, that 1120S, and that is going to kick out a K1 and a W2. So those are our two avatars here, if you will. So now let's talk about the self-employment tax. It's 15.3% Medicare and FICA. It is both sides, the employer and the employee, because you're self-employed, you serve on both of those sides. If you have a day job, you're only paying half of that. About 7.65% on your paycheck is withheld for FICA taxes. But when you're self-employed, you pay both sides. So that's obviously very important for the business owner, because that's a 15.3% tax. If we were just still on a Schedule C, if I made a bottom line of $100,000, what did I say? About 15.3%. That means I'm going to owe about $15,300 in self-employment taxes, not even factoring in income taxes. On the S corporation, it doesn't go straight from here to the self-employment tax. For the Schedule C, this goes straight from here on our bottom line down to the self-employment tax. For the S corporation, you now go on payroll. You give yourself a W-2, and then the net will go and come down to you via what's called a K1. So we're not going to talk about reasonable compensation, how much you should state on your W-2, but know that you have that opportunity and you can kind of leverage or push and pull the W-2 and K1 when you're an S-Corp. For simplicity, let's say we cut it in half. We say, hey, out of our total profit, we are going to pay ourselves a salary, $50,000, and the remaining net of that is going to come on a K1. The self-employment tax is only assessed on this W-2, 15.3%. You could probably guess it's going to be half of this amount. So whatever that number is, 7,650? Yeah, 7,650. I'm good at math. You can trust me. I'm an accountant, right? So, I mean, I'm going to trust you know how to do math, but it's very clear. You are going to save over $7,000 in self-employment taxes by making an S selection. And that's just assuming a $50,000 W-2. If that W-2 is lower, then your self-employment tax is going to be lower, increasing the savings. So I hope that paints a good picture for you about why we like this strategy so much and why it's so powerful for that self. Like, hey, I bet you could do a lot of good with $7,000 as opposed to maybe our government in recent years doing with 7,000 of your dollars that, hey, if you have the right structure, it could have been yours and stayed in your pocket. But before we even get to this, just want to call out some logistics and things you got to do beforehand, because we don't want to just willy-nilly say, hey, okay, hey, I'm making an S election. Okay, well, what goes into that? So let's talk logistics. Talk with a tax accountant, an advisor, but you're going to need to fill out a form 2553. It's the S election form, and when done properly, you can actually still, for this 2025 tax year, you can make it retroactive to January 1st. So for the entire year, even if you've spent 11 and a half months, 12 months almost as a Schedule C business, you can still make it retroactive to January 1st. Now, if you just form your LLC in the middle of the year, then it's a little different. Then you can only make it retroactive to when you actually form the LLC because, hey, it didn't exist before that. So either January 1st would be the ultimate, but at least to, if you started this year, make it back to the first date of your LLC. Now, this typically only makes sense if we generally recommend if you're making more than 50K plus in profit, that's when you'll see savings because, hey, remember, what did I say? You will have to, there's going to be two things you're going to have to implement with an S-Corp. You are going to have to engage a payroll provider, right? You're on payroll now, so you need to still pay FICA taxes to the government. You need to issue, or you need to file Form 941s and 940s to capture those wages and the FICA tax withholdings. So payroll provider will take care of that for you. And you also now have a separate tax return. So you're going to have to pay for preparation on that as well. So that's why the cost benefit, we really don't want to start doing that until we get about $50,000 in profit, because that's, even factoring these in, that's where we could see a benefit. And then before you do any of this, make sure your bookkeeping for the business is up to date. Last thing you want to do is, in your head, you're like, oh yeah, I got like $75,000 in profit. Go to a bookkeeper, they come back, they're like, dude, you made like $30,000. So then if you just went through the hassle of, hey, engaging someone to do an S election form, you called up the payroll provider, you already are getting an S-Corp return done, whatever, all these additional costs you just signed up for, and now it didn't even make sense because you only had $30,000 in profit in the first place. So we want our bookkeeping to be updated. Make sure it's updated. Take it to an accountant, take it to an advisor, take it to Ledger. Hell, book a call with us, bring your financials, we'll talk about it, and see if it makes sense to do it before actually filing this form and then working on getting payroll in the mix, assessing W-2, or, hey, even supercharging the strategy, talking about, hey, maybe getting a solo 401k in the picture, sponsored by our business. Do these things first. And one last thing to note, hey, we can do this at the end of the year, and sometimes you can even do it after the end of the year and make it retroactive for the previous year, but it's going to be really hard. Sometimes you're going to incur additional costs for, hey, maybe filing late payroll tax returns, issuing late compensation, issuing late W-2s. So typically after December 31st, it doesn't work. So that's why we recommend meeting with someone ASAP to decide if you need to make this election, filing the form, and then going through the steps. So we really want to do this not only by December 31st, but really by today, by yesterday, by a month ago, because the IRS shuts down the last 2 weeks of the year for quote unquote maintenance, whatever that means. So if you file this form and fax it in, you might not hear back for a month, 2 months, 3 months. And you don't want to be held in purgatory just waiting to hear back from the feds. You don't want to put ourselves in that position. So everyone, I hope you found this video insightful and giving you some more color about why the S Corporation is so powerful for us self-employed out there. If you need some additional guidance, please, we'd be happy to help. Get over to our website, book a call with us, and we'd love to talk further about your numbers. But if anything, like, comment, subscribe to this channel, and we'll see you guys on the next video.